Hey, Tim, what's the best rate you have available? That's the kind of calls a lender gets. And the fact of the matter is, if they tell you that rate, they are probably pulling your leg because the fact of the matter is, because of loan level price adjusters, they can't get you that rate because that rate is for people who fit into a very small box. The best rate we have is for people with 780 FICO scores. They're putting 40% down. It's a purchase on a primary residence, and they're going to live in the property and all that good stuff. Let me show you what LLPAs are. Loan level price adjusters on the screen now are based on what the mortgage companies and investors like Fannie Mae and Freddie Mac are going to price a loan out at. They start with the best prices for that person, as you can see at the very top, with a 780 plus FICO score and lots of money down, 70 to 75% loan to values, 75 and 80% loan to values. They start actually having a hit of 0.375 if you look at it. So those people who have lots of equity and really high credit scores get that rate that we're going to tell you, oh, that's the best rate we have. But there's so many loan level price adjusters that you have to pay attention to. For example, let's just take this person down to the 639, the very bottom of this first top chart, and follow it over and say, I am only going to be able to put 10% down. So that's that 85% to 90% column. Now, all of a sudden, you see this 2.625%. Those are additional points that would be charged to that borrower with that FICO score with only 10% down on a purchase. Now, let's go even worse. Let's talk to you about somebody who's buying a second home. That's on the lower chart. And we're going to jump down to second home. That means somebody's going to buy this property. It's going to be the lake house. They're going to use it during the summer and whatnot, but it's going to be their second home. They're not going to rent it out as an investment, but they're going to actually use it as a second home for fun. Now, if you look at that second home and we go follow it over to the 80 or the 85 to 90% column, we'll see there's 4.125% points that have to be added to that rate. There's two ways that's going to happen. Either you're going to pay 4.125 percentage points of the loan amount higher to get the same rate that that person would with the higher FICO score, purchase, owner occupied. There's going to be 4.125% loan level price adjusters. Two ways. You pay them up front, lots of points at 4.125% points, or we start pushing the interest rate up to help absorb some of those points so that you don't have to pay so many points up front, which is what's most commonly done. So this is why loan level price adjusters are so important and why you can't just call and say, what's the best available rate you have today? Well, the best available rate for you and what you're trying to do could be very different than what is a best rate available. And if you're talking to an unscrupulous lender, they're going to tell you their best rate. Well, when they get down to the nitty-gritty, all of a sudden you're going to find out that that rate's changing because of these loan level price adjusters. This is Tim Harrison, the HLC team at Cornerstone Home Lending, and this is our educational series, Straight Up Mortgage Talk. I hope that helps you understand. Talk to you soon.